Hello, welcome to Be the Boss of Your Money. I'm Mitch Goldberg. I'm so glad you could join me today. Your time is valuable, and I so appreciate that you spent some of it with me. What a crazy day. There is so much news today. It is making my head spin. Literally, my head is spinning today. I want to go over a couple of things. I'm going to break it down for you, what's important. You're watching my live stream, Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you. We're going to roll a quick intro. There's too much to go into, and I want to make sure I spend every minute on what really counts. So we're going to get into some important stuff. Finance. Here we go. Hello, thank you so much for joining me. I'm Mitch Goldberg, and you're watching my live stream, Be the Boss of Your Money. We've got some very important things to go over, some important details. Another Biden stimulus plan, the Fed holds steady, earnings galore, including Apple, Facebook, and Ford. Lots to go over, and quite a bit I want to talk to you about cryptocurrency. We have some big things going on today, and you should know about all of them because these are going to be creating what I think big swings in markets, lots of ramifications to follow for quite some time. While you're watching this, if you have any questions, please ask me in the comments. I love hearing from you. It is actually the best part of this whole show. If you're watching in the replay, welcome to you as well. I would love to hear from you. So certainly ask your questions in the comments as if you were watching in the live stream. Words of encouragement, words of wisdom in the comments are always appreciated. I already see a few people out there, and I will be checking those out and getting to you momentarily. And I'll be putting your comments on screen as well. And if wherever you're watching this from, if you don't mind, give it a thumbs up so I could see your name. If you want to remain incognito, then that's quite all right. And let's get into it. Today, the big news, really, it's tough to even know where to begin. New York City lifting lots of mask requirements, dining restrictions. Tough to say. Another big news item is I went out to lunch today, a business lunch, and then I met a business person at Starbucks near me, and I'm going to my first live networking meeting in over a year on Friday. I will be there in person. I can't wait. And you know something? It's going to be a total mayhem hug fest. It's going to be incredible. I might even have to bring some tissues. Let's take a quick look at the really important news. I'm so glad you're joining me. Let's go to the computer screen. First things first, Apple reports another blowout quarter with sales up 54%. Do you realize, as big as Apple is, to grow sales by 54%, as big as they are, the law of large numbers simply does not apply to the largest mega cap tech companies. And that includes others like Google yesterday came out with blowout earnings. And then it includes Facebook, which just came out with earnings just before Apple. So we're going to get into that. So this is what we have to know. Apple reports a blowout quarter. Stock is up 4% in aftermarket trading. Everything is just absolutely booming. iPhone sales, computer sales. Let's take a look at where the stock is trading right now. Stock is up almost $6 after market trading. Stock is not too far from its all-time high, and they authorize another $90 billion in buybacks. Let's take a look. Facebook stock was up more than 6% after hours trading. Earnings beat the street by miles, 330 versus 237. Revenue, 26 billion, up better than expected of 23 billion. These numbers are staggering, as big as they are. It's really remarkable. It's like these large tech companies are aging in reverse. Daily active users, monthly active users were a little bit less than what was expected, but it didn't really impact the stock. Let's take a look. There's good old Mark Zuckerberg. Let's take a look at where the stock is trading. Look at that. Facebook up $18 after market trading. For all of you who are thinking about or who actually acted on the sell, and when people were worried about a antitrust lawsuit against Facebook and the stock went down to the 260s, you're probably kicking yourself now. And this is why I've said right here on the show, right here, I said to you, I am not selling one single share of Facebook stock because of a potential antitrust lawsuit against Facebook for my clients. Not selling any of it. And here we are, 325, making new all-time highs, at least in aftermarket trading by miles. That is significant. And let's get to Ford. Okay, Ford was a little bit more disappointing. Ford beats Wall Street estimates, maintains 2021 guidance amid chip shortage, but they didn't raise guidance. They can't raise guidance because they just don't have enough chips to make enough cars to raise guidance. You can't raise guidance if you can't make more products, I guess, is what they're trying to say. They could raise prices. However, the company is doing very well. They're firing on all cylinders. Okay, let's take a look at the price of the stock. Off 2.5%, 2.65%. So about a 3% drop between today's date, between today's trading and aftermarket trading. Not the end of the world. I wouldn't read too much into this. The stock had rallied quite a bit over the last year. The 52-week low is in the fours. So we could give them a little bit of slack. I would not read into this anything negative. It's a chip shortage, but demand for automobiles is there. That's not something that you could really fix, not Ford. No auto company could fix that on their own. Demand is there, so that is super positive. Let's close some of my screens. I have like 100 screens open, okay? Let's talk about crypto. SEC delays decision on approving Bitcoin ETF. Van Eck, a fund company called Van Eck, and Fidelity Investments, both have applications to launch Bitcoin ETFs. Now, these are not the first times. This is not the first time that a company has applied to create and trade to launch a Bitcoin or crypto ETF. But they have been rejected in the past. But I do think we're getting very, very close. The SEC had a 45-day period to review the applications. Then they get an extension. They took the extension. So we're maybe thinking in June, we'll finally have a crypto ETF. It might just be a Bitcoin ETF. We'll see. It looks like just a Bitcoin ETF. Hopefully somebody will come out with a more diversified crypto ETF with Ethereum and XRP and Litecoin and altcoin and a whole bunch of them mixed in one, because we really don't know which crypto is really going to be the big winner yet, although Bitcoin seems to be running away with the industry. We'll see. Now, I wanted to talk to you about this. Gary Gensler, who is now chairman of the SEC chair, okay, Gensler is considered an expert on cryptocurrency and has taught courses on digital currencies and blockchain at MIT. There's a whole bunch of things going on here, okay? So let's take a look at this. We're talking crypto. The Federal Reserve, okay, is studying what it would be like to launch a U.S. currency, a dollar crypto, okay, a digital version of the dollar. I mean, the dollar is basically digitized because we're all using credit cards or PayPal, Venmo. Wires aren't actually cash. These are all just electronic credits at banks that are moving all over the place at the speed of the internet. However, we want to know, is it feasible? So the Fed is studying if this would be feasible, if we could launch a digital dollar, a crypto dollar. Wouldn't be so cryptic though, but you get my drift. So the Fed is studying that with MIT. Gary Gensler, Biden's choice for chair of the Securities and Exchange Commission, who was also chair of the CFTC during the Obama administration. This is somebody that has a lot of background that makes him very suitable for chair of the SEC. So I went into MIT website, MIT News. Okay, MIT Sloan's Gary Gensler to be nominated for chair of the Securities and Exchange Commission. This is from January, but this is what I want to show you. He was CFTC head. Okay, his nomination is subject to confirmation. He's already received his confirmation. He was a highly successful banker. Let me see if I can make this a little bigger so you can see this. Okay. He was a highly successful Goldman Sachs banker for nearly 2 decades. So, we always have that Goldman Sachs touch somewhere in the world of global finance. But extraordinarily bright, extraordinarily talented. He served in the U.S. Treasury Department as Assistant Secretary for Financial Institutions in the late 90s, Undersecretary for Domestic Finance in 99 to 2001. He served as senior advisor to Senator Sarbanes, if you recall the Sarbanes-Oxley bill. But here it is. Here's what I want to show you. At MIT, Gensler has been professor of the practice of global economics and management at MIT Sloan, co-director of MIT's FinTech, at CSAIL program, and a senior advisor to the MIT Media Lab Digital Currency. Okay, let me show you what I'm looking at. Okay. I need to get in here. Okay, here I am in the corner. All right. Let me go back. So a highly successful investment banker at Goldman Sachs. So while I'm reading along, I want you to see what I'm actually looking at. All right. But this is what I want to show you. Senior advisor, MIT Media Lab Digital Currency Initiative. He has taught classes about blockchain, digital currencies, and other financial technologies, and won the MIT Sloan Outstanding Teacher Award of the year 2018-2019. Okay. So what am I trying to get at is that you couldn't find, in my opinion, a more perfect regulator when it comes to talking about crypto. What I read is about 3/4 of all Bitcoin trades trade on exchanges outside of the US. So it's really hard to regulate Bitcoin because of that, and to see which foreign actors or bad actors, not to say foreign actors are bad, but bad actors are in it. We need to find more out about that. Maybe there will be a Bitcoin that's just traded in the United States. Maybe there'll be a Bitcoin that's just for foreign investors. We have to see. But the important thing is we've got a regulator who truly understands the world of Bitcoin. Okay. We've got a few people out there. I just want to highlight Judy out there. Thank you, sweetie, for the heart. And we have, thank you. We have Roxanne. Yes. Thank you very much, Roxanne. Hey, Roxanne, thank you very much. And Roxanne, you're always out there supporting my content on LinkedIn, and I see it. I notice it. I feel it. Greatly appreciate it. Thank you very much, Roxanne. And go follow Roxanne. Okay, Roxanne Theodoropoulos. Oh my God, I think I pronounced it correctly. Go follow her on LinkedIn. Go connect. All right, so let's keep going. Some news, okay? So that's why the SEC delays decision on approving Bitcoin. We just need to find out more. I don't think they could delay it forever. I do think that a crypto, or in general, or Bitcoin specific ETF is something that we see in 2021. It's getting hard to avoid. It's getting harder to avoid it. Okay, so let's click that. Let's talk about this also. Goldman Sachs sees flaws with Bitcoin, says it's too early to say if it will replace gold. Let me show you that on the screen. Okay. Bitcoin is basically what Goldman Sachs is saying is it's too volatile to be a store of value like gold. Now, by the way, gold is volatile also, maybe not as much as crypto, but crypto in the last year went from 10,000 to over 50,000. Gold didn't make a move like that. So if crypto goes from the mid 60,000s to the high 40,000s back to the mid 50,000s like it just did in the last 2 weeks, hey, you have to remember where it actually came from. So that's Goldman's point of view. Fine by me. Let's move on to what the Fed said. Okay. Fed said a whole bunch of things, but basically, okay, back in the corner. Oh, I'm in the lower corner, but I should not be there. Let me go up here. Okay, here I am. I'll go in the right-hand corner. Upper right corner. Fed holds steady on interest rates, bond purchases. What's so significant about this? Okay. The Fed has been hell-bent on keeping interest rates low, and they've been constantly telling us, listen, we know the economy is speeding up. In Fed Chairman Powell's post-meeting remarks, in his remarks, he said that we do expect the economy to continue to improve. We do expect inflation to exceed our 2% target, but we're going to average inflation at over years, not just over 1 quarter. And so it's 2.5%, which it's about 2.5% now. We need to raise it. He's going to say, well, the last 10 years, 15 years, it's been low. So why should we raise it for a quarter? He is of the opinion that once we get through the sugar high of the reopening, of the incredible surge in demand for products and services, travel, that sort of thing, we get back to living, and the stimulus works its way through the system. We've had lots of big trillion-dollar packages of stimulus. Then he expects that the economy will revert back to slow and steady growth, slow and steady inflation, or I should say low and steady inflation, and maximum employment. But he's going to push the pedal to the metal until we do reach maximum employment. I would say this, that the Fed, when inflation was high in 1980, 81, the chairman of the Federal Reserve back then was a gentleman named Paul Volcker. And he sacrificed employment to get inflation down. With Powell, today's Federal Reserve chairman, it's the exact opposite. He's willing to sacrifice inflation to get unemployment down. We haven't seen this in the playbooks yet. We've never had such dovish central bankers who are steadfast in their point of view. Powell has consistently reiterated his view that he's going to keep accommodation easy. The Fed's going to keep buying treasuries and mortgage-backed bonds, and they're going to keep rates low. Okay? Very good for some sectors, in particular banks. Okay, because they make more money on their net interest margins. NIM, that's the spread that they make between what they pay you in the bank, like 0.01%, and what they lend money to you, which could be typically a lot higher. Okay, so let's take one more gander at something else. We already went through the Facebook earnings. I'm just changing my screen along. This is the second to last thing that we're going to go through. New York to end restaurant curfew. Allow bar seating in New York City starting May. They should just start it now, but okay, in May as COVID cases drop. By the way, I'm a total proponent of masks. My family, we've been very careful. I received both Pfizer vaccines. The second one I received weeks ago, so I am vaccinated. We still believe in being very carefully. So when I say they should open now, I don't want to give the misimpression I'm trying to get maybe political on my live stream. But at this point, what's the difference if you do it now or in May? That is more or less my view. And I went out today, went out for lunch, ate outside, and it was wonderful. So let's go to the very last thing, okay? Biden today announced another $1 trillion plus stimulus package. And I have my notes over here. Okay. Biden to unveil a $1.8 trillion plan for children and families. It was just a couple of weeks ago, he introduced a $2.25 trillion infrastructure plan on top of, what was it, a $1.8 trillion stimulus plan for COVID. So if you want to know why stocks could hold up, or if you want to know why the economy is doing so well, with stimulus like this, how could it not? Not to mention the economy has so much momentum in it right now. So what's in it? He's going to, President Biden is going to be more specific and lay out the terms or what he wants to see in this bill. He's going to lay out the terms tonight on TV in front of Congress, just about 100 days in his just about his 100th day in office, or the first 100 days, and he's going to speak to a joint session of Congress. First time he will have two females behind him. He'll have Vice President Harris and Speaker Pelosi behind him. Okay, so what's in the plan that he's talking about? $225 billion toward high quality child care, $225 billion to create a national comprehensive paid family and medical leave program, $200 billion for free universal preschool for 3 and 4 year olds, offered through a national partnership with the states, $109 billion toward ensuring 2 years of free community college for all students, $85 billion toward Pell Grants, increasing the maximum award by $1,400 for low-income students, $62 billion grant program to increase college retention and completion rates, $39 billion that gives 2 years of subsidized tuition for students from families earning less than $125,000 enrolled in a 4-year historically Black college university, tribal college, or minority serving institution. $45 billion toward meeting child nutritional needs, including expanding access to EBT programs like SNAP, food stamps, okay, which helps some low-income families with children buy food outside the school year. $200 billion to make permanent the $1.9 trillion COVID stimulus plan's provision lowering health insurance premiums for those who buy coverage on their own. And extending, this is, I think, the biggest part of it, extending through 2025 and making permanently fully refundable the child tax credit expansion that was included in the COVID relief bill. That's the one where for children under 6, families below a certain income threshold will receive $3,600 a year, roughly $300 per month, starting in about 6 to 8 weeks. And if children who are 6 to 17, including 17, will receive $3,000 a year, so $250 per month. And instead of doling it out all at once, the government wants to see what it would be like if they actually paid people this money on a monthly basis. Okay, making permanent the earned income tax credit for childless workers, making permanent the recent expansion of the child independent care tax credit. It's just a lot of stuff. There is a lot of stimulus going around. So we'll find out more details tomorrow, and then more details. We'll find out more details tonight, and then more details tomorrow. So listen, I started the show, okay, by saying how much news there is to go over. Hey, I wasn't kidding. We just went over a lot of information. So just think about it like this. Market moving news from Apple, okay, and Facebook. Tomorrow, we get the last of the FANG M stocks. That's Amazon. We've already had Facebook now, Apple, Netflix, Google, Microsoft. So the only one left is Amazon. Does Amazon lose any steam, now that the pandemic is not completely over, but ending, or do they just go right on marching ahead with the incredible numbers that they've been able to show? And not to mention, we want to see how Amazon Web Services performs. We had Biden announcing another another $1 trillion plus stimulus plan. The Fed holds steady. They'll keep printing. They'll keep buying bonds. They'll hold interest rates low. Look, I've been saying for a while, we are in a booming economy. And if you want to know why, these are all the reasons. Well, today's news all adds fuel to the fire. So that's a lot to absorb in one show. I love doing this because when I have to talk to you about this, I have to really make sure I know my stuff. So it makes me really take a deep dive into all of the stuff for my reasons of my expertise reasons. Thank you very much. I'll see you tomorrow. If you have any questions that you think of later, hit me up in the comments. I'll be on the lookout for them. And I would like to bid you all a very good evening. Thank you.